Briefly on the legal side, the content of this video is for educational and informational purposes only. It does not constitute investment advice or a recommendation to buy. All analyses, models, and strategies represent personal opinions. No guarantee of accuracy or completeness is given. The full disclaimer can be found at the end of this video and in the video description.
Welcome back to Learn for Finance. This time with our September edition of Seasonal Strategies. Lisa, today we have a really colorful quartet, from sneakers to consulting giants, recycling, and high-tech made in Germany.
Sounds like a stock runway, but with analysis instead of glamour.
Exactly. And before we start, we have further developed our approach, because one weak point has been so far. Even if seasonality often convinced, there were also quite a few lost trades. Therefore, there is now an overall assessment with an additional score. That means, for each stock, we not only check seasonality, but also technicals, fundamentals, valuation, moat, and shareholder focus. So we want to better identify who truly has the best chance shock risk profile at the start, and to filter out the flops from the beginning. And that's not all. For our early adopters, there's a bonus add-on at the end. We reveal which of these 4 stocks is the best short-term trade and which is the best long-term buy for the next 3 years. Staying tuned is therefore doubly worthwhile.
Not just counting colors, but making the whole thing more robust. I like it. Very cool. But Axel, one more thing. What about the portfolio analysis?
This is an exception this time. The reason: the seasonal October video will already be released in the last week of September because many signals are concentrated there. And in October, we will even have to publish several videos, as the number of stocks cannot possibly fit into a single format.
All right. Then today, a full program with 4 candidates, and at the end, the add-on. Who will open the series?
Of course, the brand with the swoosh, Nike. But beware, it's not just sneakers that shine here. Nike, the world market leader in the sports goods segment, shoes, clothing, accessories. The business model: development, design, distribution. Strategy: direct to consumer via own stores and online, plus digitalization and premiumization.
Also, brand, and direct contact with the customer.
The seasonal window spans from purchase on 24 September to sale on 21 December. Average return, 12.3%, median 13%, hit rate, 86.7%, volatility, 12%, max. Drawdown, 15%, Sharp ratio, 1.03, 5 out of 6 points.
Also clear advantage in autumn and winter. The Christmas shopping season plays right into our hands.
Technically, it looks weak. 1 month projection, negative, no outperformance. 3 month pattern, very weak, little similarity. Best historical event, slightly bearish. Typical fluctuations: 1 month, -1 to -13.5%, +2 to +7%. 3 months, -3 to -15%, +5 to +18%. 1 out of 6 points.
Sounds not exactly like a chart fest. Clear technical weakness. But it's good that we now have this analysis in addition to the seasonality, because most of the time, seasonality never lasts longer than 3 months.
Fundamental is strongly against. Market capitalization greater than $150 billion US. Net margin touched 10%. ROE 24.4%, extremely strong. Moderate debt, solid equity ratio. Robust cash flows, 5 out of 6 points.
Also stable figures, even if the growth recently weakened a bit.
Discounted cash flow fair value, 110 to 112 US. Current price, $98 US. Lynch peg, fair. Undervaluation, only 10 to 15%. 1 out of 6 points. Nike has an extremely strong brand moat. Global network, logistics, IP, innovation, pricing power high, especially in the premium segment. Risks, Adidas, Puma, On Running. 6 out of 6 points.
Also, genuine moat, but the competition does not sleep.
Scalability 2 of 2, pricing power 2 of 2, return on capital 2 of 2, management 1 of 2, cyclical resilience 1 of 2. Total 8 out of 10 points.
Strong, but there is still room for improvement in management.
Dividend yield, a 1.3%. Buybacks, over $4 billion annually. Capital structure solid, no dilution. Ownership structure, strongly institutional. 5 out of 6 points.
Shareholders also benefit twice, dividends plus buybacks.
Brief summary. Strengths. Global brand, ROE 24%, buybacks, pricing power, balance sheet. Weaknesses, low undervaluation, weak technical setup, slowed growth, consumer dependency. Opportunities, DTC expansion, digitalization, sustainability, turnaround potential. Risks, intense competition, economic cycle, currency, and reputation risks.
That sounds like a long-term champion, but short-term without a kick.
Nike's profile. Fair value, weak. Seasonality, strong. Technical, weak. Fundamentals, solid. Moat, excellent. Shareholder. Focus, very good.
Also clear chances in brand and quality, risks in timing and valuation.
Exactly. Nike is a marathon runner, not a sprinter. Share number 2. Booz Allen is a consulting and technology partner for the US government, primarily defense, intelligence agencies, and cybersecurity. Market position, leading government contractor in security critical sectors. Strategy, expansion of AI, cloud, cybersecurity, and analytics.
Acronym, also the backbone of US security consulting, so to speak, the silent architect in the background.
Seasonal windows, purchase on 24 September until sale on 2 December. Average return plus 8.2%, median plus 9.2%. Hit rate 85.7%, positive in 12 out of 14 years. Volatility 8.5%, max. Drawdown minus 8.5%. Sharp ratio 0.97, 5 out of 6 points.
Fast, boring, stable, but that's exactly what you want in uncertain times.
Technically rather cautious, 1 month projection, negative, no outperformance. 3 months, medium, 4 out of 5 stars. Pattern present but inconsistent. Mostly correlated event, started bearish, ended with a pleasant 12.2%. Typical fluctuations, 1 month, 1% to 14.5%, plus 2.5% to plus 9%, 3 months, 2.5% to 12%, plus 4% to plus 118%, 3 out of 6 points.
Not a chart darling, but not a failure either. Solid in the midfield.
Fundamental impressive. Revenue, $926 billion, $1198 billion, plus 29%. Net income, $271 million, $935 million, almost quadrupled. Net margin, 10.2%, ROE, 93.2%, debt, high, debt to equity ratio, 3.9, but stable. Altman, Z, 4.4, solid. Piotrowski, 7 out of 9. Benish, 2.71, no manipulation. 6 out of 6 points.
ROE over 90%? That's madness. Sure, high debt, but still strong.
Fair value models. Discounted cash flow, 229. Lynch peg, 140. EV sales, 133. Average fair value, 167. Current price, 102.5, plus 63% upside. 6 out of 6 points.
Also crystal clear and underrated. You rarely see it so clearly.
Strengths. Trust of the US government. Extremely high entry barriers. Pricing power. Only moderate, as the government is the main customer. R&D low, innovations mainly customer driven. But recurring revenues. 90%, very stable. 3 out of 6 points.
Also, a more stable security architecture, fewer innovation drivers, more guarantor of continuity.
Scalability, 1 out of 2. Pricing power, 0 out of 2. Return on capital, 2 out of 2. Management, 2 out of 2. Cyclical robustness, 2 out of 2. Total, 7 out of 10 points.
Clear winner in stability and return on capital. Less so in pricing power.
Shareholder, yield, 25% including buybacks, enormous. Dividend policy, consistently increasing. Buybacks, aggressive, no dilution. Capital allocation, efficient. 6 out of 6 points.
Also clearer shareholder favorite, dividend plus massive buybacks.
Summary. Strengths, government customer loyalty, high ROE, focus on future technologies, recurring revenues. Weaknesses, low pricing power, dependence on US budget, limited own R&D. Opportunities, increasing budgets for cyber and AI, defense expansion, growth. Risks, US politics, budget cuts, concentration risk, limited international diversification.
Also extremely reliable, but also very US oriented.
Brief summary. Rating, very strong. Seasonality, good. Technique, neutral. Fundamentals, excellent. Moat, moderate. Shareholder, very good.
One of the best candidates in September. Fundamentally strong, attractively valued, seasonally stable.
Exactly right. A clear top pick, especially if the price pulls back again. Now, stock number 3. Befesa is a specialist in recycling and environmental technologies, a true niche leader. Core business, recycling of steel dust, salt slags, and aluminium waste. Market position, leading provider in Europe. Strategy, expansion to China, India, and the USA, with a clear focus on ESG growth.
An ESG play with an industrial core.
Seasonally strong period. Purchase on 29 September until sale on 6 December. Average return, plus 9.65%, median plus 8%, hit rate 80%, 12 out of 15 years positive. Volatility 8.7%, max, drawdown minus 7%, Sharpe ratio 0.84, 5 out of 6 points.
Sounds stable, seasonal, so clearly at an advantage.
Technically even better. 1 month projection, positive, strong setup. 3 month pattern robustness, very high, 5 out of 5 stars. Historical patterns, very similar. Best correlated event, plus 7.5%, 2018. Typical movements. 1 month, plus 4 to plus 11%, declines minus 1 to minus 6%. 3 months, plus 5 to plus 18%, declines minus 2.5 to minus 11%. 6 out of 6 points.
That looks like a trader's favorite. Strong technical momentum.
Fundamentals are weaker. Revenue, 2024, 1.239 billion. Net profit, 50.8 million. Net margin, 6%. ROE, 6.1%. Debt, none. But Altman Z-score, 1.17, danger zone. Piotrowski, 5 out of 9. Benesch, 2.28, 3 out of 6 points.
No debts either, but no real stability either, rather fragile.
Fair value models. DCF, 31.5. EV sales, 34.4. Average fair value, 32.2. Current price, 26.4, plus 22%. Upside, 5 out of 6 points.
Also with valuation discount, value is there.
Strengths, regulatory advantages, proximity to customers. Entry barriers, high, capital intensity plus regulation. Pricing power, medium. Recurring revenues, high, long-term contracts. Innovation capacity, rather low. 4 out of 6 points.
Also solid through regulation, but not an innovation leader.
Scalability, 1 of 2. Pricing power, 1 of 2. Return on capital, 1 of 2. Management, 2 of 2. Cyclical resilience, 1 of 2. Total, 6 out of 10 points.
Solidly managed, but not outstanding.
Dividend, constant but low. Buybacks, none. Dilution, none. Capital allocation, conservative and efficient. 4 out of 6 points.
Also cautious and stable, but no shareholder magnet.
Summary. Strengths, ESG focus, regulatory advantage, proximity to location, niche leadership. Weaknesses, weak financial stability, declining margin. Opportunities, expansion, China, India, USA, ESG demand, M&A. Risks, raw material and energy prices, economic cycle, low R&D investments.
Also ESG fantasy, but balance sheet weakness remains the big question mark.
The profile, Rating, good. Seasonality, good. Technique, very strong. Foundation, mediocre. Moat, solid. Shareholder, expandable.
Ideal for tactical seasonal trades, but not for buy and hold.
As the last stock, number 4, Infineon is a heavyweight in the semiconductor industry, one of the world's leading providers of power semiconductors. Main business, chips for automotive, industry, energy, security strategy. Focus on power semiconductors, green energy, and global expansion of production capacities.
Also the tech and climate trend player from Germany.
Historically strong, purchase on 22 of September until sale on the 2nd December. Average return, plus 12.4%, median plus 13%, hit rate 86.7%, 13 out of 15 years positive, volatility 14.4%, max, drawdown minus 12.5%, Sharp ratio 0.91, 5 out of 6 points.
Also in autumn, almost a self-runner, very strong seasonally.
Short term but weak. 1 month projection. Negative, no setup. 3 month pattern robustness. Medium, 3 out of 5 stars. Historical patterns, inconsistent. Most correlated event, minus 9.3%. Typical fluctuations. 1 month, minus 1.2% to minus 10.5%, plus 2% to plus 7.5%. 3 months, minus 3% to minus 15%, plus 4% to plus 16%, 2 out of 6 points.
Also fundamental strong, but timing a real problem.
Fundamental convinces Infineon. Revenue, 2024, $18.3 billion. Net profit, $2.2 billion. Net margin, 12%. ROE, 13.3%. Low debt. Debt equity, 0.32. Altman, Z, 3.9, healthy. Piotrowski, 6 out of 9, good. Benesh, 2.56, no manipulation, 5 out of 6 points.
Also fundamentally really solid.
Fair value models, DCF, 37.0, PEG, 32.5, EV sales, 34.5, average fair value, 34.7, current price, 28.9 plus 19.9% upside, 5 out of 6 points.
Also fairly slightly undervalued, a good setup when the technology eventually kicks in.
Advantages, clear technological leadership, close customer loyalty, high entry barriers, CapEx, IP, certifications. Pricing power, medium, dependent on the cycle. R&D share, greater than 10% of sales, innovation capacity very high, especially in power semiconductors. 5 out of 6 points.
Also innovation leader, but cyclicality remains the risk.
Scalability, 2 out of 2. Pricing power, 1 out of 2. Return on capital, 1 out of 2. Management, 1 out of 2. Cyclical resilience, 1 out of 2. Total, 6 out of 10 points.
Typically, cyclical industry, strong in peaks, weak in downturns.
Dividend, 1.4% stable. Buybacks, none. Dilution, none. Capital allocation, conservative, growth-oriented. 4 out of 6 points.
More of a growth story than a dividend case.
Summary. Strengths, leading in power. Semiconductors, high R&D, e-mobility, and ESG exposure. Weaknesses, cyclical cash flows, strong competition, TI, NXP. Opportunities, megatrends, e-mobility, IoT, energy efficiency, subsidies, e.g. Dresden. Risks, economic cycle, technological lag and high-end geopolitical trade risks.
A clear megatrend candidate, but as volatile as the industry.
The profile, rating good, seasonality very strong, technique weak, fundamentals strong, moat very good, shareholder neutral.
Also buy and hold, case with tailwind, but not suitable for quick trades.
Exactly. Those who endure the cycle will receive quality and megatrends. Patience assumed. Now we come to the comparison and ranking for September 2025. We have evaluated all 4 stocks based on the same criteria. Here is the overview of the scorecard.
Wow, Booz Allen is really pulling ahead.
This results in the following ranking. 1. Booz Allen Hamilton, 38 out of 40. Extremely strong overall package, top rating, excellent balance sheet, stable seasonality, high ROE, defensive structure. 2. Befesa, 33 out of 40. Technically and seasonally strong, valuation potential present. Fundamentals somewhat weaker, hence slight deductions. 3. Infineon, 32 out of 40. Solid fundamentals and valuation, exposure to megatrends. However, weak technical momentum hampers progress. 4. Nike, 30 out of 40 strong quality and brand, but timing and low undervaluation limit short-term potential.
Also, Booz Allen is clear September winner, and Nike this time the last.
Our conclusion: Booz Allen is the defensive winner. Befesa the momentum play. Infineon the megatrend candidate. Nike remains a quality brand, but without a short-term boost.
And now it's your turn. Which stock is your favorite for September? Write it in the comments.
And for our loyal early adopters, there is still an add-on as promised. Why? Because many of you might already have the stocks in your portfolio. Therefore, we have created an additional ranking list for the buy and hold portfolio for 12 to 36 months.
A real bonus so that you not only have the seasonal perspective, but also gain a long-term view.
Buy and hold ranking, 12 to 36 months. 1. Infineon, growth leader, high R&D, megatrend e-mobility, healthy balance sheet. 2. Booz Allen, defensive cash flow champion with stable government contracts. 3. Nike, strong global brand, but initial saturation tendencies possible. 4. Befesa, ESG opportunities, but structurally too many weaknesses for long-term hold positions.
Summarized, Booz Allen is the September winner, Befesa the momentum trade, Infineon the megatrend case, and Nike remains a top brand, but without a seasonal boost.
Exactly. And this is our small thank you to all early adopters. Your support makes it possible for us to continuously improve this approach. Our conclusion: seasonality alone is not enough. Only in combination with fundamentals, valuation, and quality does a real edge emerge. The September ranking clearly shows. Booz Allen, defensive winner. Befesa, momentum trade. Infineon, megatrend case. Nike, quality brand, but seasonally weak. We will see how these stocks develop seasonally. We hope that with these improvements, we can better identify potential losing stocks.
Also 4 stocks, 4 roles in the depot. Not everything for everyone, but something for every strategy.
One important note: the portfolio analysis is omitted this time, intentionally. Our October video will be released in the last week of September because so many signals are concentrated there. And in October, there will even be several special videos. Too many stocks for just one format.
Sounds like a hot autumn. Now it's your turn. Which stock should we analyze in the October check? And do you want us to do a deep dive into Booz Allen as a single stock analysis? Write it in the comments.
And if you like our approach, like, subscribe, bell, and share the video with someone who should see seasonality not as a game, but as an investment rulebook.
Thank you for being there. Clear analyses, smart decisions. See you at the end of September with the first October analysis.
A big thank you from me as well, especially to everyone who has stayed with us so far. That shows you are already living our slogan, learn smart. Invest smarter.
Disclaimer: the content on the YouTube channel, Learn4Finance, is for educational and informational purposes only. All analyses, quantitative models, strategies, data preparations and content presented reflect solely personal opinions and interpretations. There is expressly no individual investment advice or recommendation to buy, sell or hold financial instruments within the meaning of Section 32 of the German Banking Act, KWG, or Section 85 of the German Securities Trading Act, WPHG. The information provided does not replace professional financial, tax or legal advice. The channel operator assumes no liability for the accuracy, completeness, or timeliness of the content. Viewers make investment decisions independently and at their own risk. Past performance, simulations or forecasts are no guarantee of future results. Important note: investments in financial instruments involve significant risks, including the total loss of capital. Please consider seeking independent advice from qualified professionals before making any investment decision.